Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. It is going to be a hot one here in the UK, so this is just going to be a short and sweet cryptocurrency market update. We're going to dive into a number of things in this one. Crypto's seen quite a nice pump over the past couple of days, and every time the price of Bitcoin goes up, even if it's marginally, and even if it's on the grand scheme of things negligent, you know, the bulls kind of come back around. And this is really the first time, or over the past couple of months, you know, you really get this sense of a bull and bear fight taking place, and you can see just how fierce it is. Now, I have a bias that I think this market goes down, and I still maintain that bias until I see reason to suggest otherwise. And what we're actually going to do in this video is we're going to drop down the time frames, because we're very much setting up similar structure to what we've previously seen. And this doesn't fill me with a great deal of confidence. Now, does that mean that this can't turn and actually go on to put in highs and invalidate what the previous structure would have looked like? Absolutely it can. But for now, we're still maintaining a very cautious bias moving forward. So I have a bias that we're going down. I could be wrong, but that's the bias that I'm still maintaining. And I think the reason being is because there's bigger fish to fry. When you look at the economy, when you look at the world generally, you know, the main question I ask myself is this a time for markets to flourish? And there are catalysts for an alternative currency system to do well in this environment. But I think pain has to come before that. And I think in terms of an economic environment, in terms of the stock market, there's still lower prices to be had. And the reason being is quite a simple one. You know, we've said that in regards to Bitcoin and crypto, it was born in 2008. Which is really when quantitative easing started to ramp up. And interest rates really since then have just gone down. We had the raises that they started to do in 2016 and had to undo in 2019 because the repo market exploded. But I don't think crypto's ever seen a recession. And I think that could be very much on the cards moving forwards. And it's my belief that crypto isn't going to fare too well in that kind of an environment. But we will see. We will drop down the timeframes, like I say, and take a look at some sort of more intricate structure. A little bit of the news right now. You know, it's a really interesting time that we're currently in because we've got earnings. So another reason I think that Bitcoin essentially rallied here had a lot to do with the CPI data and the fact that we didn't see the markets tank like we all thought they should have on that. And it's not the CPI data that's necessarily the issue. It's what comes as a result of it. You know, tighter monetary policy, they continue on the path that they're on. And people really, you know, just thought that the number was the kind of catalyst. It's not really that. It's more what comes after. And the fact that Bitcoin didn't sell off on this, you'd have seen a real exhaustion of the sellers on that news. And then the buyers really took over. And for somebody looking for entries or for somebody looking to capitalize off swing failures, that would have been a big one, because if the market isn't going to drop on, you know, a 9.1 US CPI print, what's it going to take? And I think that's something that people would have got behind. But my real concern is, you know, are we just setting up similar structure here to what we've previously seen? I think that could be quite likely. I mean, these are uncannily similar. Now, just because something's similar doesn't mean that it's going to necessarily play out again. We will get into a bit of the news in just a second and really sort of highlight the point that, you know, I'm not trying to be necessarily bearish here. I just think that we've got a lot to contend with. You know, are we just potentially playing out the same nightmare? Potentially. You know, this could be totally invalidated if you come up and you smash this and you hold it and then you start taking out prior levels. But we're not there yet, so we keep on being cautious until we see reason to suggest otherwise. I mean, I'm not sure. I mean, can you guys see the similarity between these structures? We've called this to be a potential bear flag, and it does very much look like it's setting up in a similar way to what this one is. You know, obviously you get the break of this down here. You know, we'll see how this interacts. But ultimately, I think that, you know, we do get that spill down to sort of the 15K range eventually. We're positioned accordingly, and going to sort of play this market intraday. Based on our overall bias, looking to take opportunities where they present themselves. But this would have been a lovely long, you know, Bitcoin from, I mean, just since the 13th, which would have been last week, you know, Bitcoin's up nearly 12%. I mean, that would have been quite a good long for anybody that took that. And certainly from the low, you know, Bitcoin today has done very well, 21% up. But my issue is that I think we have bigger fish to fry. You know, crypto is just a very small part of the overall financial market, but yet very tethered to it. And the problem that I essentially envision isn't necessarily crypto related. I almost feel like we're almost waiting for a Lehman's moment. We'd spoken about this ages ago. I see people now talking a lot more about this. We said pay attention to miners because they become more of an issue the further down Bitcoin's price goes. Because miners become forced sellers when it becomes unprofitable for them to mine Bitcoin. There is a period where, of course, they won't have to sell Bitcoin, or they'll only have to sell a small or not as much of an allocation of the Bitcoin that they mine, you know, when Bitcoin is up, because obviously they just need to cover costs and they'll maybe hodl the rest. But now they don't have that luxury. They need to keep the lights on and they'll need to start selling reserves. And this is essentially saying the capitulation event may have already happened. Potentially, we have seen miners look to sell, but I think, you know, when the price of Bitcoin's down and energy hasn't, you know, still costing the same or if not more to produce a Bitcoin, you know, these miners become forced sellers. It's something we spoke about in detail literally weeks ago. The sniper, the market sniper had shared this, talking about the defaults that we're seeing, you know, government debt. I think we are looking at a bit of a debt crisis across the board, something that we have also spoke about. You know, I don't think that we get out of this lightly. And I think given the fact that we haven't seen a recession since, you know, 2008, and you can say, okay, well, what about March 2020? But that was really more of a capitulation sort of black swan event that was very quickly band-aided. You know, we could be looking at a real rollover here, I believe, for crypto. You know, the good news is eventually it does come to an end, and I could be absolutely wrong here, guys. Maybe this is the bottom. I just personally don't think it is. And all these influencers or people on YouTube and Twitter calling for a bottom, not really sure what they're basing that on, other than the fact that Bitcoin is already, you know, 69% down. And this is going to be a key month that we're moving into. Earnings could be a even bigger catalyst for stocks after the market's wild ride on rate fears. So that we have got the next rate hike that's going to come at the end of this month. We're not sure whether they're going to do 75 basis points or 100. So whether they're going to go for a full point or whether they're going to go for 3/4. Either one is bad. You know, maybe markets take a little bit more relief with a 3/4 point rate hike. But for me, it's still very much bad news. You know, you've got to remember they haven't done a 75 basis point rate hike since the 1990s. That says a lot. You know, we're living in very unprecedented monetary conditions, and that is usually the catalyst for, you know, things to go wrong. And I still feel like, you know, the Fed is really still on the path to breaking something, and we've not seen that yet, which is why we're so cautious. We're long-term nothing but bullish on Bitcoin and crypto. Short to mid-term, though, we are very, very cautious. And for me, it's all about trying to take a non-biased approach, which is hard to do when you have a bias, like I think the market's going to go down, but trying to look at all sides of the coin. And like I said, there is still definitely the scope for, you know, if Bitcoin comes up and starts, you know, invalidating lower lows and lower highs and really starts on a new trend and starts to hold, and we see a sort of shift around Bitcoin, then, you know, maybe this is the bottom. It's my bias that it isn't. It was my bias over here that this wasn't the bottom, and over here. And I still believe that this is, you know, likely going to lead to a sell-off. It's Sunday today, so watch, because it's very hot in the UK and elsewhere, so people are probably not going to be as focused on the charts, probably going to set up for a very low volume day, and you can have some serious moves on this day. Which way it's going to come, to the up or the downside, is really going to, we're really yet to see. But we do have positions on at the moment, and we'll see how they go. So the minor event, you know, we've got a sort of debt crisis taking place. We're seeing the dollar continue to spike. You know, the dollar dies on dollar strength, not weakness. Inflation will likely be tamed next year when rate hikes start to work, IMF chief says. This is another thing as well that I find very interesting. Inflation will likely be tamed next year when rate hikes start to work. So what are they referring to there? Because rate hikes obviously haven't or aren't working yet, and rate hikes really are there to kill off demand, and that demand doesn't just stop at the supermarket. You know, it echoes through to markets generally and broadly, and this is why, or one reason I think that we enter that recession. And we've done plenty of analysis on looking at the stock market, looking at the NASDAQ and the S&P and how they react in a recessionary environment. You know, given the fact that crypto is so tethered, you know, we're at this sort of 200 weekly moving average for the NASDAQ. You know, if it rolls and does a sort of 2008, crypto's very, very much, and we've looked at all this, we've still got the draws on here, going to follow. You know, are we in this period before we get that capitulation? This is why we're maintaining the cautious bias, because if that does happen, I'd rather be on the right side of the market than the wrong, and not calling a bottom, not looking to sort of glory hunt here in regards to being a bottom caller and potentially, you know, on a slim chance being right. I'd rather keep you guys as safe as possible moving forward. So we've got earnings. This is really going to reflect how your indexes for the US are going to do. We had some earnings. I think PepsiCo did well on Tuesday. We also had, who else did we have? We had PepsiCo. We had some of the big banks. I believe that JP Morgan didn't do too well, but then Citigroup did really well. So there's some kind of mixed data there, all feeding through. And the earnings that we get, certainly with your big companies that make up a large part of your NASDAQ and other indexes, are really going to feed through to the stock market and reflect that. And given how crypto's so sort of tethered at the moment, it's going to be well worth watching. But we will keep you up to date on this channel. So just to reiterate everything that I'm saying here, I don't think this is a bottom. Could it potentially be? Yes, absolutely, we could be wrong. But I think based on a number of things, this is not likely. Could it, you know, could we be wrong? Yeah. But for now, you know, we keep on with our kind of bias. And just looking at this, I mean, it's very, very similar structure that you're kind of reliving here. You know, you swing fail this, it won't be long before your bears start to get, and your short traders start to get on the back of this and looking to ride that momentum to the downside. You break it. You know, we know we're right now in this kind of, and I'll show you quickly, very crucial kind of no man's land where we're filling in a lot of the inefficiency here that we've spoken about before. Can you see how we're kind of in between two periods of consolidation? You know, you break this level, you've got a lot of room for downside in terms of, you know, there's not really that much structure that was going to hold you here. Natural that we were going to bounce here, and we have indeed done so. The issue is if you come back down, certainly come like something like this, break it, you know, you are looking at that downside. But we will keep you up to date daily, as we always do on this channel. If you've enjoyed the content, a like is always appreciated, so is a comment. Watch out for earnings reports, we'll keep you up to date. And watch out for the sort of broader macroeconomic picture and things kind of breaking, because that's kind of where I see us going. And I think, you know, is there the potential that crypto continues to run into the FOMC meeting? Absolutely. But is that the next catalyst to slam things down after the CPI had kind of failed and people are now getting on the back of it and counter trending it? We will see. We'll keep you up to date on this channel though, however. If you enjoyed the content, like is always appreciated, so as a comment, and I'll catch each and every one of you in the next YouTube video. Thanks a lot for watching, guys.